What's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Sunday Stock Watch, the series I post every Sunday where I let you guys know what stocks I'm keeping an eye on going into the trading week. We'll talk earnings, we'll talk IPOs, and we'll also just talk about a few sectors that I'm excited about right now. Before we get into it, I will ask you guys to please give the video a like if you do go on to gain value from it, or if you're invested in any of the companies we're talking about today. Subscribe to the channel if you're new, and check out my complete portfolio and daily newsletter. First link in the description if you're interested. All right, so in front of us, but I'm sure no surprise, we have the Tesla chart open. Very common sight around these parts nowadays. But I'm actually not going to go to. I'm not at all in depth on Tesla today, just because I've been talking about it so much lately. That said, though, I do want to touch on a few other players in the EV sector. Tesla specifically, and even these. I don't even know if we're going to look at the charts, to be honest. I want to wait to see how they continue to play out this week. Tesla, obviously the kingpin. How Tesla performs this upcoming week is very pivotal to the EV sector as a whole, in my opinion. So it will be interesting to see. I'll keep you guys posted with stock talks on those. That said, I will still go down the list of names, give you guys my brief thoughts, kind of some cliff notes on my thoughts on these names. At the end of the video, we will also cover some of our good old COVID-related biotech plays at the end as well. Again, saving actual in-depth analyses for future stock talks after seeing how they perform. But I do want to talk to you guys about them a little bit and just give you guys my rough take on them as of today. Okay, but what I do really want to focus on in this video is some earnings. Okay, so there are a lot of big earnings next week. I do feel like next week is a very pivotal week for the general equity markets. So I want to read through this article with you guys. It is by Vince Martin of Investor Place. This is a great article. I'm going to read a decent amount of it with you, but that's because I think it's very good. I completely agree with everything this guy said, and I just want to go over it with you guys and kind of give you my thoughts as we read through this. On top of that, we will also look at a few IPOs next week. To be completely honest, I'm not even sure what a lot of these names are. But IPOs are just super hot right now. Like IPOs, mergers, etc. You guys know the deal. Are just are just having their moment. So we will go over those. We'll just keep an eye on them. I will keep up with these over the course of the week if there's anything to talk about. But I just want to put these guys on your radar. So first up, let us go over this article. 7 earnings reports to watch next week. There's 7 earnings reports next week that stand out from the crowd by Vince Martin. Again, this is a great article. Shout out to Vince Martin of Investor Place. Earnings season is at hand. The earnings calendar picks up next week as big banks and major consumer names report. The releases come at an interesting time for the market. Tech continues to soar, but elsewhere the news is mixed. The S&P 500 is actually down 2% over the past month. The Dow Jones Industrial Average has performed even worse. More broadly, the rally since March certainly has not been popular. It's difficult to remember any stretch that better illustrates the old metaphor of stocks climbing a wall of worry. The question is whether earnings next week or through the rest of earnings season will change the market's trajectory. Indeed, first quarter reports in April and May don't seem to have moved the market at all that much. In many cases, investors simply shrugged at corporate earnings. Weak results were expected, companies delivered in kind, and the focus remained on the recovery. With the novel coronavirus cases in the U.S. rising and a clear divergence between growth and value, tech and industrial second quarter reports may be different. Expectations likely are higher. Investors may forgive another round of soft results, but they will be looking for concrete signs of progress going forward. It's not clear that U.S. companies will deliver. Market bears have been waiting for a catalyst to undercut this rally, and that catalyst could be on the way. From that perspective, earnings next week can provide a preview of what's to come. There are some big companies reporting with these 7 releases. The key ones to watch. Okay, so again, that was a lot to read, but I think this guy couldn't have said it better. I completely agree. This upcoming earnings report is important because it really gauges investor sentiment on the actual economics of the economy right now. So again, April and May, like this guy said, and objectively, the earnings reports didn't mean much. And again, the markets are very different from the economy. Financials don't matter much in this current market. And the April and May, last quarter's earnings reports, didn't really dent the market because everyone was expecting them to be bad, right? The economy was completely closed. Everyone was kind of brushing them off just because it was obvious that they were going to be bad. But this quarter, I don't think, and again, I could be very wrong. We'll have to see. That's why it's so exciting this upcoming week in regard to earnings. We'll have to see how investors take these earning calls and how these companies actually do. Because a lot of people are expecting economies slowly starting to open back up. Again, a lot of states are withdrawing their reopening plans right now because coronavirus cases are just through the roof. So again, people aren't going to be super surprised if they're bad, but it's going to be interesting to see how investor sentiment changes if they're like significantly bad or significantly good. Again, we'll have to see. So we have Pepsi, JP Morgan Chase, Delta Airlines, Johnson & Johnson, Domino's Pizza, Netflix, and Ericsson. Okay, so again, we'll just briefly go over these guys. I'll read some highlighted points. Earnings report date for PepsiCo, Monday, July 13th before market open. So again, Pepsi's kicking off the week. But it's also a big report for PepsiCo stock itself for one key reason. The stock hasn't moved. Pep has traded almost perfectly sideways and in a tight range since early April. Excuse me. That in turn makes the reaction to earnings interesting. Does any sort of news, even a soft quarter, analysts are expecting sales to decline almost 7%, drive the stock higher simply due to the fact that it clarifies the story, or are expectations still too high, even for a stock moving sideways? The first key report of the week poses an interesting test for the market. So again, the earnings themselves aren't that important in my mind. As we've learned from previous earnings, they're not super important, the earnings themselves. It's how the investors react to this news, okay? Obviously, if they're tragic, it will be a bad reaction. If they're better than expected, I don't think it's going to be a great reaction. That's a big thing that I'm kind of concerned about. Say these companies do impress and exceed earnings expectations. I don't think, personally, and again, I could be very wrong on all of this, but my gut instinct is that even if they're good, they won't see much of an impact, considering so many of these companies are almost back up to all-time highs. Okay, so even good, like what is considered good, is not on par with how it's obviously, very obviously, not going to be on par. At least Pepsi and a lot of companies like banks and airlines, which we're about to look at, are not going to be on par with any time in recent years. Okay, so it's going to be interesting to see. You guys just really pay attention to these earnings and how investors react to these earnings. All right, so next, JP Morgan Chase. A lot of banks next week report earnings. This is huge for the entire financial markets. Earnings report date, Tuesday, July 14th before market open. The biggest earnings news next week will come from the big banks. Tuesday sees releases from JP Morgan Chase, Wells Fargo, Citigroup, US Bancorp, and follows on Wednesday with Bank of America reporting the following day. For the group as a whole, the question is if earnings can re-inspire confidence. JP Morgan probably needs to lead the way, given a long history of earnings beats, and its status as the most valuable of the big banks. So again, so many banks report earnings next week. It's very important just because, I'll read this right here. And of course, confidence from big banks could echo across the market. Perfectly said. Investors have bid up stocks even with the threat of a midterm recession looming. If that threat seems less likely amid positive commentary from the largest financial institutions, there could be more for the market as a whole to run. Okay, so again, big banks, like they are the pillar, literally the pillar of the financial markets. Okay, so big banks realistically run a lot of aspects of this country and of the economy. So it's very important to see how the balance sheets and how the financials of these big banks are looking. Okay, and again, if it's very impressive, which I truly can't imagine that they're gonna impress. I mean, they might be catching some like a bunch of fees. Like they're tacking on a lot of almost fraudulent fees. I would consider. I'm not a huge fan of banks personally. I do think there are some criminal aspects to how banks operate, and there objectively are if you understand how banks work. But that said, if they do impress on earnings from fees and whatnot, then that is good for the rest of the market, just because again it does echo throughout the entire markets, because the banks are a huge pillar of the financial markets and the economy and the markets as a whole. Okay. So Delta Airlines, these poor guys, these poor airlines. Earnings report date Tuesday, July 14th before market open. The travel industry desperately needs some good news. Rising pandemic fears have led the sector to pull back in recent weeks. The U.S. Global Jets ETF, ARCA, NYSE ARCA Jets, at one point had doubled from its lows, but has declined about 1/3 from the early June highs. We'll see if Delta can deliver that good news. Personally, I'm skeptical, as am I. Well said. I seriously agree with almost every point this guy's made in this article, so I do recommend you guys go check it out, for real. Despite being optimistic toward the industry at the beginning of the year, I still see pain ahead for airlines. Leverage in the business and on the balance sheet suggests share prices can keep falling. Travel demand, particularly on the business side, isn't returning anytime soon. Still, it's possible Delta can change the mind of skeptics like myself. Expectations certainly are at rock bottom. Any positive commentary from management likely would make headlines. I don't believe Delta is going to pose much of a surprise on Tuesday, but if it does, it will be more than just the DL stock that rises. Okay, so again, you have to remember, with Pepsi, with JP Morgan, it's not it's not only gauging sentiment for that company itself, it's gauging consumer sentiment and optimism or pessimism around the sectors as a whole. So when Delta announces, if they impress significantly, then I mean, United, American, Spirit, whatever is going to do well, just guilty by association in a good way in that sense, but guilty by association in the guilty way as well if they do poorly. Which, I mean, I will truly be surprised if Delta impresses on earnings. United just announced a few days ago. I covered that in a recent video. How United just announced the plan to straight cut, furlough, whatever you want to call it, 36,000 workers, and it's obvious. Like these airline companies have gotten bailed out by the U.S. government. Again, printing, money printer go burr. A lot of that money has gone, rightfully so, to be honest, to the airlines. Like, although they did share buybacks, they did a lot of executive practices that are so common. But I mean, that's just unfortunately a systemic issue, and that's how the system works. Agree with it or not, if you guys understand that, you might not know what I'm talking about right now. But they were given so much money by the U.S. government, and it's like the overhead of airlines is insane. Like, this is like the epitome of like maximum overhead of a company. They have jets. They have such a crazy amount of staff. Like, there's so many moving parts to airlines. And when you completely shut down the economy and they go to zero, they go from 100 to zero real quick, it hurts them, and they're not able to withstand. That's why, again, United, even with all the money they're given, they have to cut so many employees. And again, it's a sad reality of where we're at economically, but it's just going to have to happen. So again, keep an eye on Delta, keep an eye on the sector as a whole, because it will this will create a ripple effect. All of these will create ripple effects throughout their given industries. Okay, so let's move on to Johnson & Johnson. Again, these are a lot of like huge players in different sectors, so that's why I think it will have an immense impact on the overall markets and the general equity markets as a whole, like indexes, S&P, Dow Jones, Nasdaq. Earnings for Johnson & Johnson, J&J, Thursday, July 16th before market open. Johnson & Johnson delivers one of two healthcare earnings releases, with United Health reporting on Wednesday. For Johnson & Johnson, the release is an opportunity to stem a fading share price. J&J stock actually touched an all-time high in late April after snapping back from March declines. Since then, the stock has given it back about 9%. A solid report could be enough to keep a recent bounce going, but as with PEP, the market's reaction to the report will be interesting. Okay, so again, it's not as much the earnings as it is investor sentiment following the earnings, how investors react to these earnings. And I've said this before, but this is really the key point I want to drive home. It's not the earnings themselves, it's how investors react to the earnings and what wave that makes. Okay, so just keep an eye on J&J. Again, that's J&J, huge pharmaceutical, pretty much everything brands. Another pillar of the markets, right? Huge company, multi-billion-dollar company. All right, so Domino's. I mean, Domino's is, I think, what's the stat? I think Domino's is the best single performer. Like, Domino's, if you held it for like 10 years or something, outperformed Apple and all of these other companies. So Domino's is, I mean, the epitome of a thriving company in a corona economy, in a pandemic, in a lockdown. Domino's, I actually haven't followed Domino's. I'm not personally invested in Domino's. They announced on Thursday, July 16th before market open. I fully forgot to highlight these, so I'm sorry. But second quarter earnings from Domino's should be more important than Domino's $15 billion market cap might suggest, particularly in concert with results from Pepsi. We'll get a better picture of how consumers have reacted in the last few weeks. For Domino's, too, this is a big report. Shares have run into resistance repeatedly in recent months, albeit in all-time highs, with the stock trading at 31x forward earnings. Profits are going to have to come in well above expectations for DPZ stock to break out. Okay, so again, Domino's is a hot stock right now. Everyone knows, everyone's ordering pizza. Again, Domino's is a great stock. Like, I have nothing bad to say about Domino's. I can't imagine their earnings will disappoint. I've personally eaten a lot of pizza lately. Like, pizza is having a moment in culture right now. Like Davey Day Trader, I do roast him if you guys are familiar, but I love that guy. I watch all his pizza reviews. Pizza is hot right now. Pizza is hype. So, I mean, I can't imagine Domino's Pizza having a bad review. I'm not going to talk much about it. I will keep an eye on it, though, and I recommend you guys do as well. I want to try to get through this. Netflix, huge earnings reports. One of the fangs, one of the all-times. Earnings report Thursday, July 16th, after market close. Investors who believe the rally in tech needs to cool off may get some confirmation from Netflix earnings on Thursday afternoon. Netflix, incredibly has a market cap that now dwarfs that of Disney. The stock trades at 60x next year's consensus earnings estimates, and free cash flow multiplies are even higher. Okay, so even the last one, so Domino's, they mentioned a 30x, about 31x forward earnings. So that is PE ratio. That's a price to earnings ratio. That's a very good gauge of whether a stock or a company is valuable at the current share price. And it means that this current stock price with market cap included is trading at that X time. So 30x multiple. What is Netflix was what, 60x multiple? Where did I just see that? So it was at 60x next year's consensus earnings. Okay, so you got keep in mind that historical normal for that multiple is 15. All right, so it does just show how overvalued again, like the markets are different. We are living through a paradigm shift. Times are different, but historical average like PE ratio is 15, and Netflix is at 60, Domino's is at 30. So everything is, Tesla is whatever, like 100x. So just be cautious with PE ratios right now. They don't really matter, to be honest, sadly, but that's the reality. So to be sure, Netflix stock is a pandemic winner, of course, but at some point the tailwinds have to be priced in. With shares up 57% already in 2020, Netflix has added over $80 billion in market value this year. It's fair to wonder if the rally has to run out of steam at some point. So, again, with how much Netflix stock is up, let's see if we can find Netflix real quick. I feel like I have to have it on here. I don't think I do have Netflix on here. I don't trade Netflix, to be honest. I did in the past, but you know what? Here, we'll look it up real quick. NFLX, I believe. Yeah, Netflix. So let's take a quick look at Netflix quick. Up 8%. So they're charging up. So, I have to imagine this is all-time highs right here. Let's go to the daily quick. Zoom out. Yeah. So Netflix stock is way at all-time highs. Their market cap is currently sitting at $240 billion. So it's pretty crazy that that Netflix is about the same size as Tesla right now. I think Tesla is bigger than Netflix now, which is insane, to be honest. So Netflix, obviously great company, obviously a pandemic, like the epitome as is Domino's of a pandemic like winner. But they would have to really impress for them to not see a fall. I would guess that Netflix is going to see a fall. Although, again, I watch Netflix almost every night. I still think that they would have to exceed expectations so significantly to kind of keep up. And Ericsson, I'm not even going to touch on that. I'll touch on it a little. Friday, July 17th, before market open. Investors won't be the only ones listening to commentary from Ericsson on Friday morning. The Swedish telecommunications manufacturer is embroiled in world geopolitics. Okay, so this could be an interesting play. Because it's why it's so interesting how so many sectors, how large players in so many sectors are announcing earnings next week. Ericsson again, 5G. They're kind of a 5G based company. They're definitely a competitor to Nokia, Huawei, etc. So it will be interesting to see how they perform, and then again how that ripples across the entire sector. So again, I'm not really going to touch on that. I'm getting kind of long winded right now and kind of wrap this up. But I just want to close this out by letting you guys know. Just keep an eye on all these earnings, you guys. You guys can go watch the report. You guys can look up the dates. Keep an eye on these for yourselves and just see how investors react to decent earnings, better than expected earnings, worse than expected earnings, awful earnings, shitty earnings. Make sure to see what their earnings are in terms of expectations, and then see how the market reacts. Because this is a very pivotal moment for the general equity markets. And I've been saying this for the past few days. I really do believe this week could be a turning point in the equity markets, and this is when we could actually see that downturn that I have been talking about for the past couple of weeks. And again, not an uncommon thought. Everyone knows that the economy is trash, the markets are on fire. So it really just comes down to investor sentiment, and that is what this week will dictate, and that is what I'm keeping an eye on. So again, I will go over these names real quick. Tesla, I'm sorry to all you Tesla moon boys. I do believe Tesla is a bubble right now. I love the company. I love Elon. I've said that many times. This is an amazing company. It's objectively overvalued right now. It's just, at what point will this bubble pop? It will pop at some point. I said this in a previous video. You see all the time Tesla come up here, all the moon boys thriving. Everyone's so excited about what's coming next. Cybertruck this, Cybertruck that, boom. I mean, this one's a little more unfair just because this was when everything crashed. But, I mean, you see it in the past here. Like, look how volatile Tesla's been. And it looks minuscule compared to where it's at now. But Tesla is known for its volatility. You guys, if you, like, I've been trading Tesla. I think the first time I bought Tesla was in, like, 2016. So I've been keeping an eye on the stock for a long time. You see this. This will 100% pop. When is the question? I don't know. But it will pop at some point. And we'll have to see then. I mean, Nikola is in a weird place right now. Nikola's obviously a bubble. Nikola's way more of a bubble than Tesla. So we'll see. We'll have to see how that plays out. I'm personally not super bullish on Nikola right now. NIO, I'm actually super bullish on because Chinese automotive stocks, or not Chinese automotive stocks, but the Chinese market as a whole is having a moment. So NIO could do very well. I mean, I wouldn't be surprised to see NIO get up to $20 just because it is a very appealing share to a lot of newer traders as well. Very hype stock. I think they're only sitting at a market cap of what, like 8 billion or something. Whoa! Market cap 19 billion NIOs. Oh, no, sorry, that's Nikola. Oh, my bad. Okay, so, I mean, it's $13 billion market cap. I mean, NIO has just been killing it lately. Again, I wouldn't be surprised. They deserve a $20 billion market cap way more than Nikola, I'll say that much. So, I wouldn't be surprised to see NIO hit like a $20 stock. Workhorse, I still think they will correct down back to like 11 to 12, maybe $10 region. SHLL, Helion, Tortoise Acquisition is the single play in this sector I'm currently the most bullish on. SPAC, I will keep an eye on. They did have a good day. I think they're going to correct a little more, and then I feel like that's a good buying opportunity. Down to Inovio, I'm just waiting for Novavax personally to pop off. I think they definitely will. I'm solidly positioned in Novavax right now. Same with Inovio. They have that lawsuit. I don't really care about it. And again, you guys do your own research. I personally don't pay any mind to that lawsuit. But Inovio, I think this whole sector will continue to do well, especially if the market does pull back. I do think that these do serve as somewhat of a hedge to the markets and are inversely correlated. So if the markets go down, these stocks will go up because investors want somewhere to put their capital if they're not performing in general equities. All right, so Sorrento is probably the single position I'm the most bullish on within this sector. I will tell you guys that. This is my largest position, and I'm super pumped to see where Sorrento goes. I think it will hit $10 almost inevitably over the course, at the very least $9. Which is about a 15% increase. So I think it'll at the very least hit $9, and I'm betting on 10. So my money's on 10. So know that, guys. I will keep you guys posted with stock talks. Getting super long now, so I'm going to cut it here. Stop rambling. Super excited with these. I will keep you guys posted with future stock talks on these sectors. Exciting times. I'm stoked to share these with you guys, and yeah, just thank you so much for watching. Again, if you want to know how exactly how I'm trading these stocks, exactly what my positions are in these companies, when I get in, when I get out, what calls, what puts I have on these. Check out my complete portfolio daily newsletter down below. Exactly as it states, it's a complete breakdown of every position I have. Along with that, I do send out a newsletter on every trading day during market hours talking about the trades I made that day, entries, exits, as well as just my thoughts on general markets overall and what's going on in my mind. Okay, so check that out if you're interested at all. If you do, I appreciate it. If not, no worries. But yeah, until next time, guys, just let me know what you're thinking about all this. And again, I'm just excited to share these times with you guys because there's so much going on, so much excitement. So thank you guys for watching. Until next time, always remember, take action, make waves. Peace.